right. Hey, welcome everybody. This is segment number 9, right? Yes, number 9. This is understanding solar incentive, and it's segment number 8. The first one didn't really count. Understanding solar incentives. We labeled it tax incentives because it's heavy on the tax incentive. And today we have a very special guest, Joshua Resnick out of Sungage. Um, Very, very knowledgeable person. You'll find him often on Facebook sharing his wealth of information and knowledge on there. And we're really happy to have you today to talk about a little bit about, federal tax incentives and, the big questions on you know, how to, how to, how to talk about tax incentives to a customer from a sales perspective, from a finance perspective, how to properly do it so that A, you don't misinform people, B, you don't get yourself in trouble, and C, so that you can have an overall pleasant experience with your customers and they understand. Give them as much understanding as you can. Okay. So, go ahead and make your introduction, Josh, if you wish.
Thank you, Manny. I'm
Yeah.
excited to be here. I've been in solar 11 years, at Sungage about 3.5. Before that, it was mostly selling directly to homeowners, a little bit of commercial. I ran a sales team for about a year. I did mostly virtual sales, a bit of in-home sales as well. And I really enjoy it. And on the Sungage side, it's a lot of fun working directly with the solar installers and helping their teams be successful. So always happy to be a resource and share my knowledge and give you some of my favorite talk tracks and tips and tricks and ways to talk about it.
Well, thanks for that. I gotta go share the screen. Apparently, I'm not sharing anything. So, how's life at Sungage been for you? I think you've been there for a while now, right?
Yeah, so been here 3.5 years and it's going really well. What Sungage really excels at is treating people really well, both internally and externally. So I'd say our greatest strength is in our people, our customer service, our support and collaboration. And you can feel that right away when you call and the people who answer the phone genuinely want to help and are knowledgeable. We also pride ourselves on not having a phone maze. So you don't even have to press 0 when you call us, go straight to a human being. So that's really nice. And over the last few years, we've been working on a lot of product updates, becoming more competitive in the market, and just easier to work with. And so I believe OneUp Solar has access to a few Sungage installers. So there's some cool features that you should have access to.
Yeah, definitely a lot of hidden gems over at Sungage. I mean, there's tons and tons of EPCs and installers who, you might want to get in touch with them through us. If any installers that offer Sungage, reach out to us. We'll establish a relationship and we'll get the thing going. But from what I know personally, they have some of the best rates. Competitive dealer fees and great qualifying criteria. So, without further, let's step into the presentation today, which again is understanding solar incentives. But we're going to talk about tax incentives first, and then we'll roll into SRECs, local incentives, rebates, and things like that. But I think Josh is just going to touch on the federal tax incentive today because that is a very, very important subject to really understand as as a sales rep or even as a homeowner or as a business or as anything. You just need to understand how they work because there's a lot of misconception around these things. So, all right, so we got Joshua Resnick, and we're going to talk about the facts. Do you want to give us some facts about the federal tax incentive?
Yeah, absolutely. So the most common, I think, misconception is just that it's a direct refund, which is not something that you're guaranteed to get. But it started at 30% and has gradually started declining on a schedule. So we're good on 26% for now, although as it continues to taper off, it'll go down to 22% and then go away. We're all hoping it'll get extended, of course, but no guarantees there. Um, it's available to both residential and commercial, so that can be very attractive on the business side as well as the residential side. Um, and it does not have to be the homeowner's primary residence, although we mostly focus on owner-occupied homes from the perspective of selling solar. Um, and the tax credit can be rolled over if you can't use it all right away. And we'll get into more of those details in a little bit.
Well, history, which is cool because when right now it is scheduled to kind of taper off and and decrease and maybe possibly even go away. But there's also talks about other stuff happening, like making the tax credit like automatically qualified for everybody,
Mm-hmm.
not really depending on your tax situation. So I don't know, that's still kind of rumors here and there. I think I've heard a lot about that, but until it's set in stone, we've had a pretty good track record of our some of our leadership in this country. When it gets down to the point where it's like they'll rewrite it, and we'll get another extension, and it's great. So
Yeah,
that yeah.
and what
So
you're referring to is currently the tax credit is not refundable in the sense that if you don't have tax liability, you won't get the balance of the tax credit back. But the refundable option that is being discussed would mean whether you have tax liability or not, you could see the tax credit as a refund. And that would be huge because it would simplify the process and basically mean you don't need to worry if a customer has tax liability. They would just be able to get that tax credit money back. So definitely something to do your own research on to make sure you're comfortable with how to explain it to a customer. But as of now, the tax credit does require tax liability.
so back in the day, I want to say 5, 6, maybe 7, 8 years ago, before finance companies began kind of structuring their loans around the fact that, hey, I know this customer may qualify for a federal tax incentive. Why don't we, change it around a little bit, give them a little bit of a break, give them some time to recover, and then, reamortize and all that stuff. In your opinion, how has that positively or negatively impacted the industry?
Yeah, it's definitely caused an explosion of growth, I think. So in the early days of selling solar, lease was one of the only ways to finance and get a zero down solar option that was cheaper than your utility cost. And so, as solar loans with the tax credit being integrated into the solar loan in some way, really allowed smaller installers to start competing. And so the mix of lease versus loan in terms of people going solar started to shift way back. And I think it provided a big advantage for smaller installers to be able to compete with the larger installers again. And I've found in my personal experience that most homeowners would rather own it than lease it. Some still prefer the lease option, but generally, all things being close to equal, most people would much rather own their system.
Exactly. Yep. And in places like California, I mean, I've even if they, happen to not qualify for a tax credit fully or not able to, absorb that benefit. I mean, it's
Mhm.
still, it's still, it only raises up your levelized cost of energy by like 4 cents. I mean, it's not a lot because, if you consider on average, we've kind of done some numbers. When you apply the tax credit to any loan, even with dealer fees and interest the way they are now, you're still getting a levelized cost of energy of around 11 cents, 10 cents. Okay, that's just on average in California, for example. Not applying that tax credit, could bring us up to around 14 or 15 cents, which, if you think about it, or look at it this way, a lease or a PPA is structured at 15 cents per kilowatt hour, but with the exception of not having an escalator, right? And also fully owning your system. I mean, and if you're set up as a business, you might even be able to, write off some of these payments as, if you operate a business out of your home, you could maybe use some tax deductions or whatever. But, I think all in all, it's a great tool. And I'm really thankful that, we have this incentive that we could use to really accelerate the growth of solar. Um, I'm going to move over to the next slide. So this slide we've pretty much covered. The home. Did you say that it doesn't always need to be a primary residence?
So that's something that I wanted to research more.
Mm-hmm.
My understanding, based on the last time I read the IRS website, I believe it said something about the percentage of the tax credit you can claim is proportionate to how much time you spend at that residence. So
Oh,
that's one of those scenarios where you definitely want to advise the customer to make sure that they've consulted with the tax person, and remind the customer that we are not tax professionals. We can't give tax advice. We can just point them in the right direction, and let them know what they may need to either research or confirm.
okay. So we'll move on to the next slide, and it's misconceptions, and this is one that we like to highlight because there's always misconceptions around the federal tax incentives and its use. And so here we just pointed out a few. I don't know if we've already covered some of these, but you can go ahead and expand on these bullet points.
Absolutely. So the way that I like to explain the tax credit is it's sort of like a gift card against your tax liability, in that you can sort of spend the tax credit against what you would owe in taxes, but you can't just get the tax credit back directly. So the analogy I use is you can't just bring a $5 gift card into Starbucks and say, give me $5. But what you can do is use the gift card when you buy coffee. And as you're giving them money for the coffee plus the gift card, you'll get more of your own money back as change, because the gift card kind of displaces it. So if you want to talk numbers, say you're buying 2 cups of coffee for $11, you hand them a $20 bill, you get $9 in change. Very simple. If you have a $5 gift card, your $11 cup of coffee, or 2 cups of coffee rather, now only costs $6. But you gave them a $20 bill anyway. So now you get $14 back in change. So to be very clear, you're not giving them a $5 gift card and getting $5 back for the gift card. You're giving them a $5 gift card, and it's pushing $5 of your own cash back to you in the form of a larger, more change. And taxes work very similarly, in terms of the tax credit can reduce your tax liability, which displaces more of your own tax prepayments back to you. So for some people, it can trigger a larger tax refund indirectly, but there's so many variables that you don't want to promise that. You want to make sure the customer understands conceptually how it works, so that they can clarify and know what they're in for. And the way that most solar loans work is they anticipate that the homeowner will be able to realize this tax advantage in some way. And so the homeowner can then repay that tax credit portion later to keep the monthly payment low. Some customers are under the impression that the loan company will sort of take the tax credit automatically, which is not the case. That's how a loan or a lease works. With a loan, the lender is waiting for the customer to make that repayment to the loan company to keep their payment low. And of course, the lenders will remind their customers with emails and calls and things like that. But just make sure the customer is aware that they claim the tax credit themselves, they take that tax credit and then hand it over to the loan company. And then as far as the rebate thing, the words can often get mixed up. I often like to remind people it's a tax credit, not a rebate. Some people will say tax rebate. I try to avoid that language, just because I don't want the customer under the impression that it's money they're just going to get back, as opposed to the way it works as part of your tax credits, or if that makes sense.
That makes a lot of sense. Right now, you used an analogy for a gift card, which
Hmm.
it was the first time I heard something like that, and it made me think. Wait, because I was thinking about like credit cards with rewards, right? When you go to
Hmm.
pay like on Amazon or eBay or
Hmm.
something, you have your credit card saved in there, and nowadays they'll show you how much you have in rewards, and if you want to apply it toward it.
Hmm.
So it's always a feel good. It's always a feel good feeling when I pull up my eBay account and I have my all my credit cards there, and I can see.
Hmm.
Wait a minute, this one has like a couple $100 in rewards. I could use that to pay for it, and it feels really good to use rewards for that. So
Hmm.
I imagine this is how it kind of feels to also be able to purchase solar and then get rewards from doing that at the same time and be able
Yeah,
to apply
very.
them later. So
Yeah, very, very good analogy. A reward just kind of comes off the total of what you have to pay. So what you're paying is
yeah.
less. You're still getting the full dollar for dollar value, but they're not sending you that reward as a check.
That's awesome. Yeah, so I have just to kind of elaborate on these a little bit more in my experience with customers, with especially with like newer representatives when they use terminologies like, oh, you get a 26% rebate, or you'll get this back, or you'll get this, to pay for your loan and stuff like that. It is, and people do kind of hold you to it. If you
Hmm.
tell them that, some people are vulnerable and they'll believe you, and they'll just trust you because you're in their home. They're trusting you with what you're saying, and so if you're telling somebody that's on Social Security, they're just retired, they don't really have any tax liability, or somebody that claims maybe $5,000 or $10,000 worth of income a year, they're going to be in for a big surprise, and so um,
Hmm.
yeah, it's always good to understand how it works. And the more honest you are and the more upfront you are about it, and like, really reiterate, look, this is not a check that you're going to get. This is definitely something that you need to, do your research on, talk to your tax professional about it, and just make sure, give yourself time to do that. Because if you have somebody that does your taxes every year, they might have some sort of strategy that you could use, especially if you're like self-employed or something, for you to say, all right, well, if you're going to do this next year, you might want to think about doing this, this, and this, right?
Hmm.
To start kind of preparing for you to create that liability so that you can fully take it. So that's why it's important for people to talk to a tax professional, because ultimately they're going to be the ones that kind of orchestrate how to get this to you, because that's what they do for a living. So yeah, definitely have them get in touch with their CPAs or tax professionals as soon as possible to start preparing for it, so that month 18 comes around, they're not caught off guard. They're over there asking you for contracts to help them get their tax credit, and you said that they were going to send a check, and this, you want to avoid that as a sales rep, and especially if you're getting referrals from your customers, they'll really really appreciate that. Yeah, let's jump into the slide where we talk about Sungage.
Yeah, so Sungage, we are a solar loan company who may be somewhat similar to the other loans you've used. Some of our core differentiators are we were actually founded by a solar customer about 11 years ago. And she tried to talk to her local bank. They were not helpful, and ended up starting a solar loan company almost on accident by loaning out her own money and partnering with her solar salesperson. And so 11 years later, we've got a very ground level understanding of the customer experience and the installer experience. So that we keep all that in mind in all of our dealings with people. Um, but we are in all states except for the Dakotas, Indiana, Michigan, and Wisconsin. Every other state we do currently operate in. And as far as who can sell our product, we have multiple installers that One Up Solar is working with. So Manny will be able to let you know which regions we have a Sungage partnership set up. Um, and I would say our core differentiators, our core advantages are the customer service responsiveness. Uh, our team will actually put in a lot of effort post approval to reach out to the customer and help you get everything signed and get the job to NTP so you can install the system. But one thing that helps on the sales side is the way we handle the tax credit is a little bit unique. Most lenders, the first 18 payments are only going to interest and not towards the actual balance of the loan. Whereas with Sungage, you're paying down the loan from day one, and the tax credit piece is zero interest with us, which means net net for the same interest rate, our monthly payment is typically $3 to $5 lower. And that advantage can help you if the savings are not super great, or if you have a financially savvy customer who just does not like the idea that they may not be that they're only paying interest for the first 18 months with other lenders. And you can use that as a competitive advantage to win sales against other solar companies.
Can I'm going to open up to a couple of questions here. I know I
Yeah.
have some right off the bat that I don't, I'd have to go into dig into my, financial resources tab and stuff like that. But, the ones that stand out, can you guys do cosigners off title?
Yes, we need the cosigner to live in the home, but they don't need to be on title.
Okay, good. Um, California, manufactured homes.
Yes, so manufactured homes are fine. We are looking mainly to see that the county records consider it, real property. It's less about the construction of how it's physically attached and more about, does the county assessor consider that it is permanently attached and real property? So usually, and we'll do a quick title search after credit approval. But yeah, manufactured homes are fine. Mobile home parks are not, if that makes sense.
That does. What about condo associations, shared roof condos, for example?
So we won't be able to do a full HOA association, but we can do multifamily buildings up to 4 units as long as the owner lives in and owns their unit. So if it's like a fourplex and the owner, and the customer lives in and owns one unit, and we know which roof is that person's roof, then we can do that.
Okay, so as long as the building has less than 4 units
Exactly. Yeah.
and they
So,
own, okay.
yeah. So I would say townhomes, yes. Condos, no, is an easier way to think about it.
Okay, sounds good. What was one of my other questions? Oh, integrations. Who do you guys currently have an API integration with as far as like proposal softwares,
We're up and
specifically?
Yeah, we're up and running with Open Solar right now, and we're working on Solo, Aurora, and others. I believe Enterflow is in the works as well. And we're constantly wanting to add APIs as well. So if you have a proposal tool that we're not integrated with it yet, bring it to us. We'd love to talk to them.
Sonobi.
Sonobi, I
That's one.
actually know that is something that we've heard a lot about, and we would love to integrate with them. I don't know what the status is currently, but that's something we would love to do.
Okay, perfect. Yeah, let us know. Definitely. What we're doing right now is we're developing the way that we're structured
Mhm.
in all the different states with all of our different partners. We've found that we're sort of between the three,
Mhm.
Aurora, Go Solo, and Sonobi. So we have a branded sort of proposal that we use for each.
Mhm.
But as you know, each one has its like special little
Mhm.
requirements, and not all installers are onboarded here or there, and so we're finding that we're working a lot with Sonobi to really integrate our business model into it because it just
Mhm.
works that way. And so, if you guys do, get through the integration with them, then I would definitely consider reaching out to all of your partners at some point
Yeah.
and getting them on there. Actually, we need to talk about that. I need to see where I can network with your install build partners. So.
Absolutely.
We
Yeah.
can.
Would love to connect you with some more installers and do more together.
Yeah, I just know that you guys work with some of the best, most custom boutique installers in the nation that others don't, and that's kind of what sets it apart. I know quite a few that have the Sungage product, and they're just, all around great installers, and
Mhm.
they're not this huge, machine that puts up 600 installs a month, and if you're doing five or something for them, then you're not
Absolutely.
really you're not really the hot stuff around town, but
Yeah.
yeah.
We really pride ourselves on excellent service and support, even for the smaller installers, and offering some of the features to even the small installers that they may not have access to otherwise. For example, we have 0% interest rates all the way out to
Oh
25
yeah,
years.
that's
And
huge.
then on the other end of the spectrum, we have zero fee options all the way out to 25 years as well. And the credit criteria is no different for those than for anything else. So it really does allow a small installer to compete against the big ones.
Guys, if what he's talking about right now, that 25-year 0% interest loan, it's a whole different animal. Like, no matter what the buy down fees are, it's just a different idea of how to sell it, because you're basically selling a cash deal, right? And so it's yeah, we'll go over it in one of our other sales trainings, but that when you use that product, it's over. I mean, you guys should really consider looking at it, because I don't really know. Is it solar only or also solar battery with 0 to 25 year?
Solar battery roof, no restrictions. It's
No
just,
restrictions. Okay.
yeah, it's just a regular product. Minimum FICO score 640, although over 660, we're seeing a 91% approval rate. You can add battery, add a roof. It's just another option in our lineup.
Okay. And then a couple more questions. What you guys approve up to 150? I saw.
Yep, $150,000.
Whoa, that's huge.
Yeah,
Okay, so
comes in
100
handy.
up to 150,000 in approvals. What's your lowest approval amount that you guys typically hand out? 75?
7,500. Yep, minimum approval $7,500.
Oh, no, I guess what I'm saying is like credit worthiness.
Oh,
I guess not everybody would qualify for 150,000, but
right.
instead they would get 75,000.
Oh, I see what you're saying. Yeah,
Yeah.
we've got tiers depending on FICO score. I don't want to get too far into the weeds, but we've
Okay.
got tiers at 100,000, 80,000, and so on. So
Okay.
yeah, you've
It's not
got a
like
fair amount.
40,000.
No,
Okay. That
yeah,
that makes sense. Okay.
yeah.
And then if it's, can you answer like maybe about like the cap, like a solar roof caps and stuff like that? And can you expand a little bit on how you guys work as far as like building a solar with roof?
Yeah, so I'm glad you mentioned that because that's actually kind of a differentiator for us. Batteries and roofs do not count against our price per watt. So for example, if you give us a $50,000 project, which includes a 10 kilowatt system and a $20,000 roof, we look at that and we see $3 a watt, not $5 a watt. And we're looking at it before you add the dealer fee. So the dealer fees are not going to count against you as far as price per watt goes. Um,
Mm,
and so the roof and battery can be up to 50% of the total project cost. Um, but the dealer fees we tend to stack on the solar rather than the roof or battery. So it actually gives you quite a bit of room for these types of projects. I usually recommend just plugging it into our overhead calculator in our portal. That way it'll structure it correctly for you.
all right, cool. And what is that cap for solar, by the way?
It
Is it
varies.
7,
It
10?
it, it varies with territory.
Okay.
Yeah, yeah. But again, since the dealer fees don't count against that cap and neither do the roof or battery, it actually leaves you a lot of room compared to other lenders when you have projects like that.
Yep, we have one here in California. I think one of our reps in here, his brother,
Oh,
we're
nice.
we're dealing with that issue right now. He's got such a giant roof. and and doesn't need such a large system. So there you go,
Yeah.
California for you, man.
Yeah, absolutely. Yeah, it can happen with
All right.
batteries, especially if you're stacking batteries.
Cool, cool. Well, that brings us to an end about talking about federal tax incentives and Sungage Financial. Um, and unless you wanted to spill into a little bit of the state tax incentives, I think we're just going to kind of breeze through that. Um,
The only thing I wanted to touch on is that
yeah.
depending on the state tax credit, in some cases we can bundle that into our tax credit deferral, the zero interest portion. So where most loans take 26% of the loan and set it aside for the tax credit, we could take 26% plus the state tax credit depending on the state. So for example, in New York, there's a $5,000 state tax credit. We can add that into our tax credit deferral as well, which makes the monthly payment very, very low. So
Oh,
that could
okay.
be really interesting. We're working on bundling in incentives for Arizona and Nevada right now. So that should be a big competitive edge. But yeah, typically with tax credits at a state level, kind of the same basic guidance applies, but there's some variation from state to state. So the real advice is just do your research on each one to
Mm-hmm.
make sure you're explaining it correctly. But that's it.
And there's a site that we're going to talk about here in the next couple of slides, and it's where most solar professionals go to get their incentive information. We'll jump into that. But hey, Josh, well, thanks a lot for joining us. Really appreciate your time here, and definitely looking forward and working with you guys, and also in the states where we can do the state tax credit thing.
Absolutely.
Besides New York, what other states like come to mind? New Mexico or South
Um,
Carolina?
I know Hawaii, and my regions are NorCal, Nevada, Oregon, and Washington. So I'm most familiar with those states. I know we're working
Mm-hmm.
on it in Arizona and Nevada. I'm not certain about New Mexico. I believe we do that in Utah as well. Um, but and then I saw a question about Illinois. I know we had the Illinois SRECs bundled in to our tax credit deferral, our zero interest portion, but I believe there was some changes with the IL Shine program. I think it went away and then it's back. I'm not current since it's not my region. So that's definitely something to, if you're selling in Illinois, I'll put you in touch with the Sungage account manager for that region, and they'll be much more current on that information than I will.
Fantastic. All right, Josh. Well,
All
thanks
right.
for joining us.
Thank you for having
I'll
me.
just Yeah, no problem. I'll stick around here, and we hope to see you. Maybe are you going to SolarCon?
I'm not sure yet. I've talked to some Sungage team members about it. A couple of Sungage people may be there. I'm not sure I'm going this year, but keep your eye out.
Okay.
There may be a couple of Sungage folks there. I will tell them to keep an eye out for you.
Yeah, we're setting up a booth out there, so we'll be there.
Oh, nice.
We'll be happy to. We'll have some games and some competitive games and stuff like that. We're going to be doing some giveaways, so that'll be fun.
That's
Um,
awesome. Well, I will tell them to
yeah,
look for you. Um,
yeah. Thanks. Please do.
all right. Well, thank you very much for having me. I'll go ahead and drop off.
All right, boss. Take care.
Thanks, all. Talk to you soon.
Cool. Cool. Well, that was Josh. All right, so state tax incentives, guys. Before I move forward, does anybody have any questions about what we just went over? Anything I can answer? There's a few questions here in the chat. What about Illinois? Yeah, Illinois is tricky, man. Like every time I hear there's so many complications about SRECs and all these things, I just don't have a lot of information on it. But there is a website where you can go and get this information, and we'll just jump right into that here in just a moment. All right, so state tax incentives, from my, from my perspective, they're the state tax incentives. In California, at least, they ran out a long time ago. They used to be pretty good, and I think it was like up to like $1 a watt or something, which is huge. When solar was like $10 a watt, so you got a little bit of a break there. Um, so yeah, state tax incentives, like he was mentioning in New York, there's like a $5,000 solid state tax incentive. So what they do is they build that into the initial payments. so that your payments are lower. So if you're going out there and like competing with the other guys, say like Good Leap or Sunlight, where Sungage payment might be lower because they're considering state incentives as well. So that'd be something to look out for. I didn't know about that till now, so I'm definitely going to be looking that way when we're selling solar in a state with state tax incentives. All right. So what happened here? Oh, wow. Touchy. Sorry, guys. Okay. A place to go and understand incentives is, and you guys are gonna love me for this, but if you don't already know what the Desire website is, we're gonna go ahead and click on here. I'm gonna give you a couple of examples. This is the Desire website. It's literally DSIRE, programs.dsire.org. I'll go ahead and put it in the chat. You guys should definitely, favorite this page, because as a consultant, you'll want to always have this at least available or in the back of your mind to pull it up when you're talking to customers or you're selling a remote deal. You're not really sure what type of incentives there are. You can always go here and they have a really nice way to filter stuff and kind of get to the point where you can even pull this up with your homeowner, with your customer, and go over the incentives. So here what we found was an example for an energy efficient manufactured homes is an incentive. Like, this is an incentive I didn't know about. Like, we just did a little bit of research. So this is for South Carolina, and it's a state incentive. It's a financial incentive. So you can see that there's an implementing sector, categories, the state. You can filter all these things, and then you can kind of go in there, and if you're ever like on a blitz somewhere, okay, let's say I go to South Carolina, I'm going to be there for 2 weeks. What do I want to know about South Carolina and this city? All right, you need to go in here. You need to do your research. All right, we have manufactured homes. We have a local rebate. We have this. We have that. Definitely use that and build that knowledge base in your head, so that when you're talking to homeowners, you are the professional that knows about these things and not the other way around. All right. The last thing you want is the customer saying, "Hey, isn't there this? Isn't there that?" And you're like, "Oh yeah, I don't know. Let me see. Let me check." Do your research before you jump on a virtual call with the customer. Just come in here and you'd be surprised what you can find. Like this one, it's a $750 rebate and a $300 tax exemption for manufactured homes in South Carolina. Who knew? I know we don't have that. It's not a huge incentive, but it's something, right? That's just an example. And so the way we found this one, well, let's go right. We can go to programs. Okay, I'm just going to show you how to navigate this site really quick, so you're not in here and you're lost. Basically, what we want to do is we want to go right here to apply filters to the programs. So we're going to apply a filter. We're going to go to technology first, and you're going to go to, if your thing is batteries, and if you're doing batteries solely, or you want to learn about batteries, go to energy storage. If you want to research solar or even electric vehicles or energy efficiency, look, there's all these things you can talk about. It's not bad. It's not a bad idea to come in here and research electric vehicles. If you're in California with the gas prices the way they are, you can figure out incentives, and you have some talking points with your customer, right? You don't only want to go in there like slanging solar panels all the time. You want to say, "Hey, look, how much is your Suburban outside? It must be a gas hog. I mean, you're paying like $300 to fill that tank. Yeah, check it out. Look at all these like electric vehicle incentives, and then blah blah blah." You might even convince somebody to buy an electric car. Therefore, you just added 7 more panels to the system. Always think about how you can upsell the system, right? And it's talking about these things. Most people are like, "Oh yeah, in the future I'll probably get an electric vehicle." Well, the future is now. Electric vehicle incentives are pretty good. They're not expensive. And dude, you're going to just save a ton of money on gas. Like, it's insane. So here we want to go and we want to filter solar photovoltaics. If solar is our, is what we want to learn about. So go solar. Okay, then we have our first filter. Our second filter can be program type. Let's see. If you want to research tax exemptions or anything like that, you can just load more and look for what, especially what you're looking for. Green building incentives, interconnection programs, yada, yada, yada. Program type. Oh, I just went over that one. Implementing sector. Here you go. So if you're looking for state incentives, you just click on state. Let's click on state. Or if you're looking for utility incentives, let's click on that as well. So let's say in this case, I'm looking for any utility incentives in the state of, I don't know, I haven't picked a state. So let's look at a state. Let's say Connecticut. I'm going to be knocking in Connecticut. Looks like there it is. So how come the filter didn't apply? Oh my gosh. I feel like such a fool right now. Sorry about that. Photovoltaics apply. Duh. There's a button at the bottom that says apply filter, so definitely don't make that mistake. All right, categories, financial incentives I care about, not so much the regulatory stuff. Implementing sector, let's go with utility and state. Can we do two? Oh, it only lets you do one. Weird. Okay, so utility. And then we can come in here and pick the state, which we said Connecticut would be a good one. All right, financial incentives in Connecticut offered by the utility companies. So let's say Eversource, ZREC, and LREC, long-term contracts. These are probably for big commercial deals. United Illuminating Company, yeah, these are all ZRECs. I don't know what ZRECs are, but they sound interesting. Let's move over to California. Let's see if California has any utility incentives. Here we go. SMUD has one. A retrofit buy down. What does this mean? SMUD offers an incentive of $300. Wow, to residential when you pass go. Customers who install grid-connected systems, all systems must be permitted and installed. So they get an extra $300. What to install system? I mean, it's just a $300 rebate that we didn't know about. That's cool. All right, I didn't know about it. I know some people did, but anyway, I don't want to expand too much on this, but this is a huge resource for you guys. Definitely use it. What else do we have here? Property tax exemption for renewable energy equipment. This is cool. I didn't know that there were property tax exemptions for solar. That is a tax benefit, and we can get creative on ads. Like if I was to run an ad on Facebook and say, "Learn how to save money on your property tax bill by going solar," right? It's totally legit as long as you come in here and you read what that means and understand it. Then you can run ads and you can just be a little different than people out there that are saying free solar or no payments forever, and these silly ads. You're not going to get anybody clicking on these things, right? So you can come in here and look at some of these things, and I can get creative. I just thought about a really good ad saying, "Hey, property tax exemption, save money on property taxes by going solar." So that's going to strike a chord to homeowners because in California, I mean, property taxes are insane, and people, when they pay that bill twice a year, they're just like, "Oh my God, this is what I pay for. I'm going to go live in Texas," and so you can get creative and do these things. That's all I'm saying is this is a great resource for you guys to come in here and learn. The more you learn about this stuff, the more professional you're going to be, with people talking about things that they don't know about and maybe you didn't even know about. And that just gives you some a pretty good stature there. Residential renewable energy income tax credit. I don't know what that is. Anyway, we'll switch on over. Who knows what solar renewable energy certificates are? Can somebody please come in and educate me on this? 'Cause I know a little bit of it. I just haven't sold too many deals in places where you can where you can sell your solar energy certificates.
Well,
Anybody? I have a gist.
can you hear me?
Yep. This is
You hear me,
John.
Manny? It's me, John.
Yeah, what's up, man? You want to talk to us a little bit about SRECs? I'm sure you've
Yeah.
dealt with them.
Yes. So there's definitely the solar tax incentive here in Illinois. Solar renewable energy certificates. The way that they work here is only the vendor is able to sell and exchange those solar renewable energy credits. Now, as a client, you get those. And when you do a system here in Illinois, I believe they're calculating your SRECs for 15 years and giving you a value on that upfront on your system. So when you're doing a system here in Illinois, they're crediting you 15 years for SRECs on your proposal or for the state incentive. And it's kind of the way, like,
Huge.
you know, the electric company here gets to count those towards their renewable energy portfolio, because here we have ComEd and they have a mandate, I believe by 2025 or 2030, they have to have a certain amount of their stuff for renewable energy. Otherwise, they get fined heavily. So this is another way where they get to do it, because I'm sure the vendors in turn sell these SRECs back to ComEd, and then ComEd gets to count this energy or these SRECs as their renewable energy portfolio.
All right. Well, one SREC is equal to 1 megawatt hour of electricity. So how many? I mean, how many kilowatt hours is that? It's about 1,000, right?
Yep.
So it's just that basic math. How many megawatt hours will a system produce in a year? Let's just do an average. Give me one sec here whilst I can do it on my computer. Let's see. Let's ask Google. I'm going to do this as if I didn't know what I was doing, and I probably don't. But how many kilowatt hours in a megawatt hour? Google, I love it. 1,000 kilowatt hours. All right. So how many kilowatt hours does a typical system produce? Let's just go with an 8 kilowatt system times 1.6, and we're going to use 1,600 sun hours here times 1.6. Yeah, about 12,800. So that's about 13 megawatt hours or 12 megawatt hours. All right. So that's about 12 SRECs a year in the first year, correct? Do you know how much they're paying per SREC out there?
That I don't know, since they just in this. I'm sorry, no, actually, it was just a few months ago they re-upped the system, because as Josh was saying earlier, in December of last year, I want to say it was December of last year, if it wasn't the year before, they completely ran out. So the system or the funds here were depleted, and they just put it back up.
All right, well, let's ask Google. One Illinois SREC is equal to blah, blah, blah. Oh, come on. You got to tell me how much they're worth. Here we go. How much are SRECs worth? Production 15 years, SREC produce. One price per SREC is $72.97. Just to give us a little bit of, an average, right? So 72 kilowatt hour or $72 per SREC. So if we got
That's about what I remember it being.
12.8 times, what is it, 78 bucks? It's about $998 times 15 years, right around that, right?
Yep, that looks about right. It's about what people. I mean, Illinois has got some of the best tax incentives I've seen from a state nationally. So yeah, they're getting a huge chunk here in Illinois.
I mean, that's a huge incentive right there on an 8 kilowatt system. Figure 8, 4,
Huge.
32. That's about 50%. I mean,
Yep.
I'm saying these incentives, these SRECs can be a huge, huge selling point, and they probably are in some of these states. So yeah, definitely do some research. If you're a remote seller of solar, you might want to Google or look up the states that offer federal. I mean, obviously, all states offer a federal incentive. if they have a state incentive, like a state tax credit on top of that, SRECs, like you're looking really pretty there. No matter, how cheap the power is in that state, your customer might be in for a very nice treat. So on average, a 10 kilowatt system will probably produce around 12 SRECs, and that's with like 1,200 sun hours, I guess. So that's like a poorly generating system. But I'm assuming that when they do that calculation over 15 years, they also take degradation into account. So not every year you're going to get the same amount for your SRECs because your system is tending to produce less every year, right? The value is determined by market supply and demand mechanics. So that just means that it could change at any moment. And facilities must be certified to sell states SRECs. I really don't know what that means, but I'm assuming they're talking about commercial buildings, right? Facilities.
No, that's what I meant by the vendors. Like, and I don't.
Okay.
Sometimes it gets a little blurred in terms of the installer. If the installer is the vendor, because sometimes they are, sometimes they're not. So far as I understand it, but that's what I mean by the vendors. The only person is able to sell the SREC. So, I mean, like legally here in Illinois, if like you get solar on your home, you legally can't say that you use clean or renewable energy because only the people that own those SRECs can say that legally.
Mm-hmm. Definitely. Now there's a company that's reaching out to me actually, and they are a national organization or outfit that's actually they're looking to buy SRECs from homeowners, and even in California. So that to me was like, wait a minute, I have, thousands of homeowners where I can, we can offer them this option, like what's in it for us type of deal, right? So
Yeah, I mean, it doesn't
we
surprise
had
me.
our
Like I
first,
said,
yeah, I mean, if it's a certificate and it's for sale, why not? There's so many people that have these certificates, they don't even know what they have on their roof, man. These systems could potentially be earning them money even after 10 years and they don't even know about it. So um, definitely, we'll get some more information on that stuff, and we'll release it in a newsletter once we have, once we have a contract to refer people over to this organization that buys up SRECs. We'll let you guys know. All right, commercial incentives. Thanks a lot, John, for that helpful information. Appreciate it. Commercial incentives, guys. This is also to me, it's really simple, right? There's federal tax incentives. There's also state tax incentives as a business, but there's also this thing called accelerated depreciation, right? Depreciating any type of equipment or system that you install in your facility can account for a very large cost of the system, up to upwards of 20-25% additional, right? So in incentives, in some states, if you do things right and you're a profitable company, you may be eligible to get at least 50% of the cost of the system paid for through incentives. So it's huge for commercial. That this is where they really need to talk to their CPAs about these things, but we can help them kind of calculate these things on our proposals. Depreciation, state and federal tax incentives, tax deductible payments, obviously. There's just a world of incentives for commercial businesses, and I think we should be looking at, and they should be taking advantage of it. The next thing is local incentives. Municipal company incentives are also considered a lot of times local incentives. And then sales rep level incentives. What are those, right? Municipal incentives is typically something that like the city offers, right? Which is not very common. I mean, I don't know of many municipalities that offer, like the city of San Diego will give you this or that, right? I'm sure there's some, but I'm just not very familiar with all of them. Again, you can go to the Desire website and look up municipal incentives, and those would be considered local. Company incentives. Your company or some of the install partners that we have may offer, I don't know, rebates, a cashback rebate on the purchase of some equipment, maybe just like a signing bonus, possibly even referral bonuses and things like that. Those are what would be considered local incentives, right? And it's always important to know that even as a sales rep, you can create your own local incentives. Obviously, you should get approval from anybody that's your manager or account manager or whatever to offer any incentives. But I know personally, I've created my own sort of incentive programs with people, for example, that have family members that live in the area, or we just want to bundle like the neighbors and the cousin and everybody, like they all live here. Hey, we'll bring everybody over here. We'll do a bundle incentive. We'll give everybody, a 10% discount plus, 6 months payments or whatever. You can get really creative with your own incentives, and always, sit down and think about, what sort of incentives or creative programs you can put together to sell more deals. I mean, there's nothing wrong with it, right? That's one that I've done, is bundling. That's a big one. Let me see if there's anything here. Oh, cashback rebates. We do cashback rebates all the time. I carry some digital rebates, or even some paper ones that look like a $500 bill. And I'll just pull it out of my back pocket. If you're a first responder, or you get this a lot where, oh, I'm in the military, or I'm a senior. Are there any senior discounts? Yeah, I have one here. It's $250. Boom. Throw it out there. Don't. If somebody asks you that, just give it to them. A couple $100 here and there. It's not going to kill your deal, right? But it's also going to help. And we have digital rebate cards that we can give you guys. And it's going to be on your rep cards. You can offer this rebate to anybody. Referral bonuses. We have a nice referral program where the first deal, I structured this one myself, and it works for me. You guys can structure however you want, but on our website we have it published where the first referral that they give is worth $500. The second referral is $750, and then the third referral and then beyond is $1,000. So what you're doing there is you're giving people, oh, I want to get to $1,000. What do I need to do? I need to submit 3 referrals, obviously. So if I'm sitting at the table, do you have 3 people that that own a home? Yeah, easy. Well, there you go. Then you just possibly made, $1,250 or something like that. What is it? No, 1,750 and 5. That's 17. That's $2,250. So you can make $2,200 right now, which pays for maybe 2 or 3 years of your solar payments, just by giving me 3 names. Let's do it, right? So it just gives people that a little bit of more of a competitive sort of like, oh, I want to get to 1,000, so I need to do 500, 750, and then 1,000, right? And then everything beyond that is always going to be $1,000. So be creative with your incentives, with your referrals, and always ask for them. I mean, don't just leave and wait, for things to happen in the system to get installed to go ask for a referral. Do it right there. Be creative. All right, and that's it. That's it for solar incentives today. Does anybody have any questions? Anybody want to add anything? Otherwise, like always, we have recorded this session. It's going to be on YouTube. It's going to be segmented. If you guys want to, pick up and learn about SRECs or federal incentives or state incentives, then just click on that link and watch the video. All right, guys. Well, thanks a lot. Again, your host, Manny Renteria, CEO of Windup Solar. I'll see you guys again next week. Next week we have what? We have solar in the eyes of the EPC, right? Yeah. Well, this is going to be cool, man, because you guys are going to get one of the best, well-known EPCs here in California, and we're going to talk about, what it is to be an EPC, and like a lot of folks don't really understand the heartaches and pains that they go through as well. It's not always like they want to take your money and adders and this and that. Nope. I mean, it's a hardship, and it's hard. It's difficult to run installation crews, guys. Trust me. I mean, installers are, it's a risky job. They're with homeowners. They're on the roof. I mean, there's a lot they have to deal with. So let's be kind to them and to each other. All right, guys. I'll see you later. Take care. Bye. Peace. Stop sharing. And I'm going to end this now.
Okay.
And then I'll see you guys later.
Next